Yes, now everyone be ready? Financial tax planning means it will come along with cash budget in unit 2. Cash budget is definitely a better option in exams because nothing much to be remembered, no rules etc. to be remembered over there. But in case, if in final exams you don't get proper option, it's not necessary you get it. You might get a question of cash budget of around 10 marks and 5 marks question of tax planning. Or you may get a question of 8 marks of tax planning and 7 marks of cash budget. Mixed options of both the chapters are possible. Means there is no proper option between the two. Yes, in unit 1, P&L, income statement, balance sheet and ratios, full 15 marks question will come. But in unit 2, cash budget, small cash budget example for 7-8 marks is also possible and tax planning is also possible. If you get an option, go with cash budget. Now, here we are going to recollect the tax rates etc. what we studied in the last year. Plus, we studied only few deductions in the last year, 80C and I think 80CCC and 80D maximum. 2 deductions were only done. But here in your syllabus, you'll have many more deductions. Beyond 80D, you'll have 80DD, 80DDB, 80E is also there. So, all the various deductions up till 80U we are going to study in this chapter. It will be far more expensive as compared to the last year. Okay. To start with, we will revise the rates of tax. So, we studied the rates of tax in 3 categories. One is less than 60 years, normal individual. The other one is 60 to 80 years, that is senior citizen. And the other one is super senior citizens above 80 years of age. Okay. Then the rates of tax is nil, 10%, 20% and maximum goes up to 30%. Okay. Now for normal individuals which are less than 60 years, remember 3 slabs. Repeat, 2,50,000, 5 lakhs, 10 lakhs. Once again, 2,50,000, 5 lakhs, 10 lakhs. Up to 2,50,000 there is no tax. Up to 2,50,000 of your taxable income there is no tax to be paid. 2,50,000 to 5 lakhs, the rate of tax is 10%. 5 lakhs to 10 lakhs, the rate of tax is 20%. And above 10 lakhs, the rate of tax is 30%. Is everyone clear with this? This is for normal individual less than 60 years of age. Now senior citizens 60 to 80 years of age, instead of 250, remember 3 lakhs. Instead of 2,50,000, 3 lakhs. 3 lakhs, 5 lakhs, 10 lakhs. Up to 3 lakhs, no tax. 3 lakhs to 5 lakhs, 10%. 5 lakhs to 10 lakhs, 20%. About 10 lakhs, 30%. Did you understand this? And super senior citizens about 80 years of age. Then directly remember 5 lakhs and 10 lakhs. Up to 5 lakhs, no tax. 5 lakhs to 10 lakhs, directly 20%. They don't fall only in 10% category. So 5 lakhs and above if income they have it, then they are treated at par with senior citizens and less than 60 years of age. So 5 lakhs to 10 lakhs, they have to pay tax at the rate of 20% and about 10 lakhs, 30%. Did everyone understand this? Okay, so once again, we study the tax rates in 3 categories. First category, less than 60 years of age. Second category, 60 to 80. Third category, above 80. Okay. Less than 60 years of age, which 3 slabs you have to remember to share?
Less than 60, 2,50,000, 5 lakh, 10 lakhs.
2,50,000, 5 lakhs and 10 lakhs. And what are the rates of tax? Is up to 2,50,000 no tax, 2,50,000 to 5 lakhs, 10%, 5 lakhs to 10 lakhs, 20%, about 10 lakhs, 30%. Then Rajesh, very senior citizen, 60 to 80 years.
3 lakhs, 50 lakhs to 5 lakhs, and 5 lakhs to 10 lakhs, and 10 lakhs.
Up to 3 lakhs,
Up to 3 lakhs,
no tax, 3 lakhs to 5 lakhs, 10%, about 5 lakhs to 10 lakhs, 20%, about 10 lakhs, 30%. And clear, super senior citizens above 80 years of age, 5 lakhs and 10 lakhs. Up to 5 lakhs,
Nil.
no tax. 5 lakhs to 10 lakhs,
10%. 20%.
Directly 20%, about 10 lakhs, 30%. Is everyone clear with this? So, write down this summary table first of all. Tax rates, rate of tax, and income slab of normal individual, that is less than 60 years of age, senior citizen, that is 60 to 80 years of age, and super senior citizens, that is more than equal to 80 years of age. Where will you include 60 years? First category or second category? Second. I have not written the sign of equal to. Once you are 60, you are senior citizen. When will you include 80 years? Super senior. I have included the sign of equal to here. Did everyone understand this? Okay. Now rates of tax we divide in nil, 10%, 20%, 30%. Okay. Up to 2,50,000, 2,50,000 to 5 lakhs, 5 lakhs to 10 lakhs, and about 10 lakhs. Switch off your mobile maybe. Senior citizens up to 3 lakhs, no tax. 3 lakhs to 5 lakhs, 10%. 5 lakhs to 10 lakhs, 20%. And above 10 lakhs, 30%. And super senior citizens up to 5 lakhs, no tax. 10% is not applicable on them. Directly 5 lakhs to 10 lakhs, 20%, and above 10 lakhs, 30%. So everyone is clear with this? Completed? There are note 1, winnings. Winnings are taxed at flat rate of 30%. Winnings are taxed at the flat rate of 30%, irrespective of level of income. Means what? Even if your income is less than 2,50,000, but suppose your total income is 2 lakhs, then in that you have winnings of 50,000. Total income is 2 lakhs, in that you have winnings of 50,000. So as such your income is less than 250, but still on that 50,000 of winnings you have to pay 30% tax, 15,000. So winnings are taxable at a flat rate of 30%, irrespective of which category you belong. Is everyone clear with this portion? Second note, surcharge of 12%, 1 to 12% is to be paid on tax if taxable income exceeds 1 crore. If your taxable income is more than 1 crore, then further on the amount of tax, you would pay a surcharge of 12%. Suppose your income is 1 crore 10 lakhs, and let us say less than 60 years. So up to 250, no tax. 250 to 5 lakhs, the difference is how much? 2 2,50,000. So 2,50,000, 10% tax will pay how much? 25,000. Then 5 lakhs to 10 lakhs? 5 lakhs, 20%? 1 lakh. Now 1 crore 10 lakh means about 10 lakhs. There is a further income of 1 crore. On that 1 crore you pay a tax of 30%, that is 30 lakhs. 30, 31, 25. On this now you pay 12% surcharge. What is 31 lakh 25,000 into 12%? 3 lakh 75,000. So 3 lakh 75,000, huge amount you pay simply surcharge to the government. Total amount what you have to pay to the government is 35 lakhs. Did everyone understand this? So surcharge of 12% will be further calculated, but that will be done only if the income exceeds 1 crore. Any doubt clear? Third point, 2% education cess and 1% she cess, SHE, secondary and higher education cess, is calculated on the amount of income tax plus surcharge. So further on this 35 lakhs, you pay cess of 2 and 1, 3%. 2% education and 1% she cess, so total 3%. 35 lakhs, 3% is 1 lakh 5,000. So 36 lakh 5,000. Did you understand this, everyone? Further, fourth, rebate. Under section 87A, is applicable. Rebate under section 87A is applicable if taxable income is up to rupees 5 lakhs. Okay, if your income is up to rupees 5 lakhs, you will get rebate of 87. First of all, rebate is 100% of tax. Rebate is 100% of tax or rupees 2,000 or rupees 2,000, whichever is less. Yes, then further write down. Next paragraph. First, rebate should be deducted from income tax. First, rebate should be deducted from income tax, and then cess will be added. Means at this stage itself you consider it. First, from the income tax, surcharge will definitely not come because your income is only 5 lakhs. So after you count the total amount of tax, if your income is up to 5 lakhs only, then first you will count rebate under section 87A, then you will minus it. After that, whatever amount remains on that, you will count 3%. Yes. Did everyone understand this? And the last note, tax on long-term capital gains is at flat rate of 20%. Okay. Now look at page number 47. Today we read ATC completely in detail, and in the next lecture We'll take up with the question on ATC. One by one we'll read the deductions and based on that we'll take up with the questions. Okay. So, who gets ATC, SSC first of all? Individual or HL? Who will get deduction of ATC is either an individual or a Hindu multimarried family. Other individuals will not get it. Now, other persons will not get it. Qualifying payments. Which payments you are supposed to make to get the reduction of ATC? Life insurance premium, maximum 20% of sum assured if before April 2012 and 10% of sum assured if after April 2012. So this you remember, life insurance premium will get the reduction of ATC, but if you make it before April 2012 then you get maximum 20%. Means if the policy is issued before April 2012, then maximum will be taken 20% of policy amount sum assured. And if policy is issued after April 2012, then the policy amounts 10% will be taken into consideration, maximum. Non-commutable deferred annuity, any sum deducted from salary payable to government employee for securing deferred annuity, here will take maximum 20% of salary. Contribution to SPF, that is statutory provident fund, RPF, that is recognized provident fund, 15-year PPF, that is public provident fund, not being repayment of loan or approved superannuation fund. Further subscriptions to NSC 8th issue, contribution in ULIP of UTI, contribution in unit linked insurance plan of LIC mutual fund, that is Dhan Raksha plan of LIC mutual fund, payment for notified annuity plan of LIC, that is New Jeevan Dhara and New Jeevan Akshay, New Jeevan Dhara 1 and New Jeevan Akshay 1, New Jeevan Akshay 2 or Jeevan Akshay 3 or any other insurer. You remember life insurance annuity plan will get the deduction. Notified units of mutual fund or UTI, notified pension fund set up by the mutual fund or UTI, that is retirement benefit pension fund of UTI. All the mutual funds don't get it. Some mutual funds have qualified, they are qualified for deduction under section 80C. So if it is mentioned in the terms and conditions, then those mutual funds only will get deduction of 80C. Subscription to home loan account scheme of NHB, National Housing Bank. Subscription to public sector unit engaged in providing long-term finance for purchase or construction of residential houses. Subscription to housing board constituted in India for the purpose of planning, development or improvement of cities or towns. Further, tuition fees to any university or college or educational institution in India for full-time education. It has to be university or college. You are paying it to us, doesn't qualify for ATC. It should be for full-time education, then only you get ATC for the tuition fees. School fees will get you. Payment towards purchase or construction of residential property like repayment of loan. Any amount invested in debentures and equity shares of a public company engaged in providing infrastructure facility, including power sector or units of a mutual fund, proceeds of which are utilized for developing, maintaining, etc. of a new infrastructure. Amount deposited as term deposit for a period of 5 years or more in accordance with the scheme framed by the government. Subscription to any notified bonds of NABARD. Amount deposited under Senior Citizens Savings Scheme. Amount deposited in 5-year time deposit scheme in post office and contribution to ELSS, Equity Linked Savings Scheme. So these all will get you the reductions. How many total payments? 21. Now we will remember them into 7 categories. Repeat. Life insurance premium, contributions, housing purpose, tuition fees, then cumulative time deposit scheme, then equity linked savings scheme, and senior citizens savings scheme. Once again, first, life insurance premium, contributions, housing purpose, tuition fees, cumulative time deposit scheme, equity linked savings scheme, senior citizen savings scheme, and infrastructure. Okay, 8th infrastructure. 8 categories will divide it. Instead of 21, you will remember only 8. First, life insurance premium. Before 2012 policy, 20% maximum of policy amount. After 2012 policy, 10%. Okay. Second, what did I say? Now it's all contributions. Contribution to RPF, SPF, PPF, 3 provident funds. NSC, mutual fund, notified units, LIC. Okay, and UDA. Which are contributions? RPF, SPF, PPF, 3 provident funds. Then NSC. Then mutual funds, LIC, and UDA. These are contributions. Okay. Then housing purpose. If you have repaid your housing loan, principal amount, that gets you 86 deduction. If you have subscribed to NHB, National Housing Bank Home Scheme, you get deduction. Okay. If you have invested in any public sector company which is engaged in providing housing facilities, you get deduction of 80C. If you have subscribed to any notified scheme of town planning committee like Buddha, etc., you get deduction of 80C. So, housing purpose is what you will remember. Then infrastructure purpose they may remember. If you have purchased shares, debentures of any company which is engaged in providing infrastructure facility, you will get deduction of 80C. Tuition fees. Further, 3 schemes. Cumulative time deposit scheme, equity linked savings scheme, senior citizens savings scheme. Did everyone understand this? Let us mark them in 8 categories. Okay. First, mark it as life insurance premium, first one. Second and third you will not have generally. From 4 to 10, put bracket on the left side and write down contributions. Okay. From 11 to 13 and 15. 11, 12, 13 and 15. Left side housing purpose. 16 underlying infrastructure facility in between. In between of 16 underlying infrastructure facility, do you get that? In 14th underlying tuition fees. In 17th term deposit. 18th NABARD bonds. 19th senior citizen savings scheme. 20 time deposit again. And 21 ELSS. So it's not difficult to remember though there are 21 items, and moreover you don't have to learn them by heart, but when it comes in the question you must be able to identify that this payment will get you the deduction of 80C. Is everyone clear with this? Conditions or incidents. Now what are the conditions to get the deductions of 80C? First, all the payments should be made for the benefit of assessees and an own life, spouse or child, dependent or independent. And like that. Own life, spouse. It's one of this. Or child, dependent or independent. Is everyone clear with this? There is no maximum ceiling for PPF under the Income Tax Act. But under PPF scheme itself, the maximum contribution is 1,50,000. In ATC also maximum is 1,50,000. Accrued interest of NSC, 8th issue, which is deemed as reinvested, also qualifies for deduction for the first 5 years. If you have subscribed to NSC scheme, then interest you don't get in your hands, it gets reinvested. So that interest on NSC which you should have received gets reinvested, that also qualifies for ATC. Did you understand this? Deductions. Qualifying amount is 1,50,000. Maximum limit of ATC is 1,50,000. And finally the quantum of deduction will be GQA, means gross qualifying amount, or 1,50,000, whichever is lower. Any confusion in this? All are clear with it? We'll see one more deduction. Question though we cannot solve. We'll solve it in the next lecture only. So we'll see one more deduction. It's better. 2 more deductions happen. 80CCC. Who will get it? Individual. Payment made out of taxable income to annuity plan of LIC or to any other approved insurer under approved pension plan. Normally we can include this in ATC also. Because even in ATC, if you have made any life insurance policy, it is included. So you can include that in ATC or 80CCC. It doesn't make any difference. The aggregate deduction of both the sections is 1,50,000. Even if you include it in 80CCC, ATC plus 80CCC plus one more ATCCD, you cannot get more than 1,15,000. Is everyone clear with it? Maximum limit remains same. So conditions are pension received or amount withdrawn is taxable in the year of receipt. Maximum limit is, make it, okay, here you cannot deposit more than 1 lakh, but overall limit of both the deductions is again 1,50,000. Amount paid subject to the limit of rupees 1 lakh, but the aggregate deduction under section ATC and CCC cannot exceed 1,50,000. And one more, let us take up ATCCD, individual will get it. Deduction in respect of contribution to a allied contribution to notified pension scheme of central government or any other employer. If you have given any contribution to a notified pension scheme of central government or any other employer, will get it CCD. Now, employee's contribution to the notified pension scheme is deductible in the year in which contribution is made. However, no deduction is available in respect of employee's contribution which is in excess of unlike 10% of salary of employee. There is one condition. Okay, your deduction will be limited to least of. Repeat. Least of first 10% of salary of employee. See on the right side column, last point. Can you see salary for the purpose of points 1 and 2 includes DLS. So what will be the meaning of 10% of salary here? 10% of basic salary plus DA. What will be the meaning of 10% of salary here? 10% of basic salary plus DA. Contribution by the employer. Okay, in this paragraph under employee's contribution. Further, contribution by employer to the notified pension scheme is also deductible in the hands of concerned employee in the year in which the contribution is made. However, no deduction is available in respect of employer's contribution which is in excess of again 10% of salary of employee. Third condition, he is employed by central government or by any other employer on or after January 1, 2004. If deduction is claimed under section ATC, then the same investment is not qualified for deduction under section ATCCD. And salary for the points 1 and 2 includes DLS, and there is no maximum limit. That is the maximum limit, 10% of salary. Your deduction cannot be more than 10% of salary. Did everyone understand this? So questions based on ATC will take up in the next lecture. And first I'll ask you all this to revise it properly and come. Tomorrow, Thursday, will continue with employees benefit. Okay, practical questions. Bye everyone.